Good day, Tea with Travis. Today is September 18th, Thursday, and I started, actually the second video I've done for today. I deleted the last one because the market is just all over the place today. It's hard to even gauge where we're going to go from here. Right now, mortgage-backed securities are down 31 basis points, which is about a third a third of a percent in fee. It was up as much as 9 earlier this morning, and it's been down as much as 50. So same thing with the stock market. They've been in the black, they've been in the red, and it's all over the place. So the reason why everything we've been talking about the last few days, WAMU and Morgan Stanley are actively both seeking to be either purchased or a merger to take place. Morgan Stanley's down 20% of their value this morning, which they were already scraping the bottom of the barrel to begin with. And WAMU's the same thing. They're basically they're valued at junk stock. So, and Goldman Sachs is down $22 a share, which they had already seen a huge decline. So, again, these big financial banks and investors are just really struggling. The other thing that is kind of interesting, I hear a lot of negative media right now with all the political stuff going about the bailout of the government with AIG. And it's not truly a bailout. There's actually a lot of potential for the government to make money on this deal, just like they did back in the 80s with the savings and loan scandal. They stepped in, and on inflationary dollars, it was actually $280 billion back then on inflationary numbers, if you take into that consideration, compared to the $200 billion takeover of Fannie Mae and Freddie Mac. So what this does is, it was a loan, one, and two, they get 79% of the shares, or 79% of the company ownership of AIG, which was a multi-trillion-dollar company. So this is not a bailout per se. This could be potentially a money maker. And the money they borrowed, the $81 billion they borrowed, it was at 11% interest. So the feds aren't really doing a bailout. So there's some misconception about that. So that could actually be a positive. It doesn't guarantee that they're going to make it through and it's going to be profitable, but it certainly wasn't a handout. So it's at 11% interest. It's paid back, and they bought 78% of the shares of the company. So it certainly is not a bailout. Other than that, jobs report came out today. Unemployment numbers are still going up. We're also the Philly Fed manufacturing numbers, meaning how much manufacturing is going on in the Philadelphia sector where they have a lot of manufacturing. That was lower than expectations. Oil went on a little bit of a jump this morning. It crested back above $100 a barrel. It's back down below 100. So just a lot of economic factors. The government has put $180 billion into global markets because the Russian stock market has closed completely. The losses were so drastic that the Russian government stepped in and said, we're not going to even let you trade until there's some stability. Same thing in the Chinese. Their Chinese stock market value has gone down 60% this year. And so they're doing some things. They're not letting them do short sales or short bids on stocks and things. So there's some real drastic worldly things going on. It's not unique to the U.S. So in a way, it's good because we live in a global economy, and when people buy into the U.S. and our companies and our corporations, it's a worldwide impact, not just all on the burden and shoulders of us and our government. So interesting times. Like I said, with the government, with AIG, if the value comes back and it's all investments from China and Russia and the European market, we can make billions and billions, the government can, based on it being a global economy. So not all doom and gloom. Interest rates are bouncing around. They really don't know where to go. The ARM pricing for a 5-year ARM or a 7-year ARM, which they've got a lot of bad press lately anyway, but they're all over the place too. So a 30-year fix is typically your safest, probably lowest rate right now. So that's which a lot of people like. Other than that, I think that's it for today. If anything really drastic happens, it's hard to tell. I mean, I keep looking at the numbers, and they're changing as I'm recording here. But if anything major happens, a reversal in interest rates where they start climbing quickly, and stock markets, just who knows what's going to happen there. But hopefully some stability will come in and some confidence will come back. The other part of the AIG bailout is the job losses and the impact on our nation with unemployment as well as consumer confidence. It's just the government has to do things sometimes, and I don't like the socialist idea of them taking over private industry, but it's certainly, there's time and place for it. And AIG was one they had to do. Lehman Brothers, they didn't. So it's not a free meal ticket for anybody by any means. So I hope that's helpful, and hopefully you have a great day. We look forward to serving you, and be blessed.